We'll move on swiftly from that. I'm going to check up on that profit tracker and hope you've done better than when I last left it, which was close to that 140,000 Rand level.
Yeah.
But we're talking about the global sugar industry. And I think, Daniel, let's get your starting point on what is happening to the global sugar price.
Okay, well, the prices come down quite a bit over the recent history. I think it's currently trading around 17 US cents a pound. The issue is that the global sugar price is very much influenced by the major producers, basically being Brazil and India. And when these guys have an abundance of crop that they push out into the global market, that tends to depress the price. Something else that also might depress the price is the relative currencies of these stocks. So because Brazil is the largest producer of sugar, the global price tracks very closely to their marginal cost of production. Now that is in the Brazilian real, and if that weakens, what actually happens is the sugar price can go down even more. And as we know, all the emerging market currencies have been weakening quite significantly lately on the back of possible Fed tapering and cash flowing back into the developed markets and yields everywhere else blowing out.
Paul, is this a sector that you are interested in, or are you one of those people that's no sugar with your health and the running, etc., etc.?
No, I'm afraid I'm a staunch sugar consumer, so I need to try a bit harder in that department. But, I mean, Daniel has talked about supply side issues, and I think that's one thing. On the demand side, it's a little tricky to call because it's very similar to, alcohol and cigarettes and other foodstuffs, is that you've got emerging markets where sugar consumption is still relatively low. And in places like India, there's a great increase in sweets being eaten and that kind of thing. And conversely, in developed countries, you've got people going off sugar and soda consumption of fizzy drinks and so on starting to tail off. People getting anxious about the high calorie content of sugar-based commodities and getting concerned about the sugar content in all sorts of food where it's not understood that there is actually such a high sugar consumption. So I don't know. I mean, I think you've got lots of different overlapping issues, and then you've got price and margin issues for the actual producers.
Daniel, where do you stand on the health side of things? Do you believe that sugar is really, really bad for you or not? Just before we go further, I mean, this is interesting. I'm sure everyone wants to know if we're talking about sugar.
Right, so just falling back on my medical degree, which I don't have. I'm always fascinated to see medical reports come out once a year. You read it, and then a year or two later, you read a report that says the exact opposite. I've actually started seeing that now again. I saw an article in the paper a few days ago that sugar is actually good for kids when we were told that it's terrible for kids. I think
so you're not clear where you stand?
I'm as clear as the conductors of these medical research studies, which is not clear.
But here's the other thing I just want to table here, and I'm sure Daniel will have some views on it too, is that a lot of sugar inputs, cane in the Brazilian case, gets used in ethanol. And we know that's a substitutive issue for motor fuels. And as a consequence, if the crude oil price goes up, so does the sugar price and vice versa. So, you've got to have a view on that.
Is that a reality though, Paul, that down the line we're going to move to ethanol as a fuel replacement for oil?
I don't know if it's going to be a global factor, but it's significant enough in the Brazilian case that the ethanol gets used for more or less depending on what's happening with the global refined products. So, I just think it follows that market. My understanding is that if oil is very, very high, then it sort of drags the sugar price up. Perhaps Daniel can comment on that.
Daniel?
Yeah, that's absolutely true. Look, what Paul said earlier about focusing on demand is something to take into account, although the demand changes that happen globally are very, very slow. Generally, global sugar consumption has grown pretty consistently at 2% per annum. The supply effect is what affects the sugar price in the short to medium term, and that is affected by things like ethanol consumption in Brazil. I believe the golden ratio is about 70% ethanol price to the fuel price. So when it's below that price, there is an incentive to use more ethanol in the blend mix in Brazil. That means that more sugarcane will go into ethanol production, less will be available for sugar production, less sugar will be exported, and there'll be less sugar in the world, and the sugar price will go up.
You're quite an expert in this space.
Except for the medical side.
Okay, but the other thing I just want to say is that the companies we're talking about today, Tongaat and Illovo, have substantial operations in countries like Mozambique, Malawi, and they actually sell lots and lots of sugar in those countries. I mean, understand, at 17, US cents per pound, you're not going to put that in an aeroplane and fly it around. I mean, that is a low value, relatively bulky crop. So, I mean, a lot of this has to do with export opportunities, yes, global markets, yes, European agricultural subsidies, yes, but a lot of the market is actually in the country of the production of the said cane.
I'm battling to draw a conclusion to our general discussion here, and that is, are we enthusiastic about the overall sugar story or not?
I'd say that it's very much a geographical focus question.
What does that mean?
So what it means is that Paul's spot on in terms of the majority of the sugar is sold domestically, and that's actually where quite a bit of the profits come from for the two sugar producers that we are discussing. The majority of their profit comes from their African sales. So taking that into account, you have to look at where these guys are focused, into which African countries are landlocked, because that creates a greater protection for the sugar that's sold domestically in those countries, because obviously if you have a port, you can have illegal import which suppress the price. So it's all about geographic exposure, which we'll go into as we look at the companies in more detail.
When we unpack these stocks. Paul, do you want to add anything before we move into the specifics?
You know, I would say I'm sort of vaguely neutral about the sugar outlook, but I'm tend towards a bullish long-term perspective, because across the board, 7 billion people, you know, oil being relatively hard to come by, resource constraints. So my underlying thesis is, yes, firmer prices over time, but I'm not so bold as to say they're about to go through the roof right now, no.